Good morning. Please read the risk disclaimer whilst I set this up. Oh, wrong one. Yeah, today it was like the first day I've ever seen rain in 3 months. So I just stood outside in the rain for about, I don't know, 20 minutes. It was lovely. Right, today's lecture is focused on primarily two things: identifying the switch from high resistance to high probability, or low probability conditions to high probability conditions. And we'll also be talking about what to do when your high time frame target is met prior to the session open. We'll talk about this when the session opens. For now, let's talk about identifying the switch from high resistance to high probability. Let me just take this off the daily. Okay, so I gave the analysis this morning that we would take the previous day low using this order block as, because if you see the spot that we rejected the order block from was the midpoint. So we reject from the midpoint of the order block. Then we go into the previous day low, easy, and we went through the previous day low into the liquidity pool here. This is an intermediate term low. An intermediate term low should generally be sustained and not run if your bias is maintained in that same direction. However, this is a bit more of a different case because it's liquidity engineered inside the fair value gap from the run up. But in this run up, we stopped at this liquidity pool. So price takes out these relatively equal highs, and then this daily high. There's an SMT at this high as well. So with an SMT and a buy side sweep, we'll see a run down below this fair value gap, which makes it an inversion fair value gap. It goes below the order block, which makes it an inversion order block. And how did I know that today would be that day? Well, if you look at this 19th of August candle, so the body on this is very small. Now, there's a lot of movement because it has buy side delivery, sell side delivery, then sell side delivery, and buy side delivery. So it had enough of a range, 381 handles. But if you pay attention to the body of the candle, it's very small. Now compare that to the previous candle's body. It isn't an inside candle, not with the bodies or the wicks. But if you look at it's a doji, essentially. It is a negligible difference between the open and the closing price of the daily candle. That means you're more likely to have volatility the following day, but you're going to see an insurgence of volume come in, and it's going to have a larger range. Today is already 60 handles larger than yesterday, and the New York session has not even begun. So that's how I knew that we would take the liquidity inside the fair value gap. That was posted on Twitter, the public Discord, and then there was more details in the roundtable mentorship. So we are going to be using those daily PD arrays. So we're going to look at the fair value gap, the order block, the inversion, and then these are graded now, so you can see that there are some levels here. I think that's slightly off actually. Which one's off? Is it my gap or is it my coordinates? There's my gap. Okay, and let's look at how price meandered around these levels. So this is the midpoint of the order block. You see that price stayed in the lower half. This 0.5 line, I'll make it, let's make it red. Touches the upper half, or touches the midpoint. Fails to touch, fails to touch, fails to touch. So we've got relatively equal highs up here. Then it uses that to begin the run lower. London has a huge sell-off, double the Asian range. How do you know London's going to be a good session? If Asia consolidates, London is a good session most of the time to trade, like 9 times out of 10. London lunch doesn't do a whole lot. It actually just consolidates and it sets up a flag pattern. So this whole session is London lunch. Look at when pre-market begins. Immediately at pre-market, you see 7 o'clock make a high. That is a VSP. That's my narrative tool. When the first minute plus or minus 1 minute of a session or a time of day that changes behavior has immediate spooling, There's a lot of use case to this. Sometimes you want to see it immediately behave as a manipulation. Sometimes you want to see it left alone. In this case, we want to see it left alone because we're heavily bearish to the downside. The more we leave this, the more liquidity is built up there, but we want to see it not touch that level. We want to see it go lower, 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 lower with speed. So now it displaces through the fair value gap's high. It leaves this as a breakaway gap. A fair value gap through an octane level, specifically the high, low, or midpoint of a daily chart or high time frame PDRA, is more likely to be a breakaway gap. And as you can see, it's left open as a breakaway gap. Trades lower again. This is a 16th level. If you're using 16ths, then you'll see that. Let me just do it for you here. As you can see, you don't need to be using 16ths. It's a bit overkill, to be honest. But you know, if you are using 16ths, you've got more levels that you can use. So, look, for example, that's a 16th level that you wouldn't have. That's a 16th level that you wouldn't have if you were not using octans. Here, another perfect reaction off of the octane level. Bounces off the octane level, takes the previous day low. Slight retracement into the audible octane places below it. Staircase effect, touches the previous day low once again. Touches the octane level, perfect rejection. Again, now we see a V-shaped reversal. So we engineer some short-term liquidity, form of relatively equal lows. It's a V-shape. It took the liquidity inside the fair value gap, aka the draw on liquidity for today, and then it rejected. V-shaped reversal. It's gone into or near to this liquidity here. So with all this, you can see a clear difference with how price action today has behaved versus a session like yesterday or like yesterday's PM or the day before that. Those were lower probability days, and there's a clear difference to where if you were watching yesterday's stream, whereas if you're watching today's stream, you're gonna see worlds of difference in the price action, and that is part of how you calculate the difference from high resistance to high probability. Is price behaving algorithmically? Is it respecting PD arrays? Is it leaving inefficiencies and then leaving them open? Is it using the upper half, the lower half? Is it only touching the consequent encroachment? Is it taking liquidity pools? Is it baiting retail in? Is it stopping retail out? There's some very, it's not that complicated. It's just something you need a bit of practice with, because to see if a fair value gap is being respected isn't that hard. Anybody can do it, but it's applying it in the right time and the right context. So this is where the session begins. I already knew London launch wouldn't do anything today. When pre-market began, it took that high, and then it is a 7 o'clock VSP, and it immediately spooled. That was the most obvious tell that it's going to go all the way into the previous day low, and then into the liquidity inside the fair value gap. And look how perfectly it took that low, only by a couple ticks. By 1.25 handles, so 5 ticks. Alright, we will cover other stuff too, so both of these things are going to be covered. Our high time frame target was this liquidity pool inside the daily fair value gap that has already been met in pre-market. When your liquidity pool or whatever you're targeting on the high time frame has been met, if it's a low hanging fruit objective and there's something beyond that, you just target the objective beyond that. This is not a low hanging objective. This is the furthest liquidity pool we have inside the fair value gap. So now we have to reevaluate our circumstances on the lower time frame. And we're going to keep this chart set to a 5-minute. No, keep it set to a 2-minute. The session's about to begin. We're going to talk more specifically about when your high time frame target is met prior to the session open. Liquidity pool objectives. You've got a 7 a.m. VSP, pre-market high. And you've got a pre-market low. I know I was speaking very fast and I kind of sped through it. It's because the market was about to open, and well, yeah, it's just because the market was about to open. try and condense it as best as I can without eliminating any of the actual, uh, you know, the the knowledge. Alright, so we're looking at some levels here. I've got an NWOG from June, crazy. I've got a July NDOG, and I've got a 20th August NDOG as well. There's today's NDOG. I'm not going to explain why I'm using the RTH NDOG because I've done it so many times before. Take that off. Let me just have a quick sip of water. Okay, and now I'm going to explain. Well, it's not going to be like a 5 minute explanation. It's going to be the rest of the session. It's going to be what you do when your high time frame target is met prior to the session open. So we already hit our daily chart liquidity objective. We only have to look at the lower time frame now, basically. Some tools that you can use when you do not have a bias, or if you do not have, or if your bias has already been met, is the regular trading hours gap. So already we've gone and hit the consequent encroachment of that. If you're ever struggling for a bias, go to the regular trading hours chart. If you gap lower, look for higher prices. If you gap higher, look for lower prices. That simple. It is that simple. Then you add in the logic of what if it's an extremely large opening range gap? Well, then there's multiple scenarios that can play out. It can touch it, then leave it, then raid it, and then continue higher or lower based on your directional bias. If it's a regular size gap, this is 160 handles, which is kind of big, but relative to the previous opening range gaps, it's not that big. It's kind of just average size. So we can expect that the first 30 minutes of trading runs into the midpoint. There's a 70% chance of that happening. Got really close here. Now it's got a fair value gap. I'd like to see that run into the midpoint. So short-term bias is just to fill in the consequent encroachment of that gap. 435.5. Okay, we closed above the NDOG. Any movement back into this NDOG is now a suspect drop. And we want to see it provide some kind of support. Only until we hit that consequent encroachment level. We're going very short term. The principle of, well, what we covered yesterday and the day before with low probability days. Today's not a low probability day necessarily. It is a low probability week inside a low probability month. But today I would say is probably going to be the highest probability day inside of this low probability week and low probability month. Simply because of, this is a very basic thing. There's just a doji candle there. That's why I need today would be more volume. It is that simple. Alright. I'm waiting for certain things to happen in price before I start really talking about this. It's taking its time at the moment. That's good. There's a long, quick, sharp drop into the end dog low. Leaves the wick. Body has so far stayed at the upper half. We'll see that maintained. Alright, yesterday's whole lecture was on waiting for the first pointed Velric to form, along with time. Today isn't a low probability day, but we can use other stuff like first presented order block. First presented order block. Okay, you can see how it stayed in the upper half of the end dog here. You finished the SMC Foundation course on Silver Bullet. Can't believe what months you're turning to. Onward and upward, my friend. You know, the SMC Foundation course, I didn't even finish that because I stopped enjoying making those videos. The live streams are very fun for me. I just get to talk, unedited, it's raw. There's a lot more knowledge. Whereas in a video, you have to kind of break it all down and compose it in a very specific way. Whereas in a live stream, you can just say it. Here's the knowledge. Make your notes. But I mean, like the very, very basics. Kinda. I should probably finish it eventually, but uh, give me some time. I'm enjoying the live streamings for now. Another doji. Same principle as on the daily chart. That should be a bit of a logic body. Okay, so if your high time frame target is met prior to the session open, the first thing you have to do is dial back any expectation, because your expectation for that daily or high time frame target to be met has already happened. So now you need more information to work with, and that information is generally going to be in the form of letting the first 15 to 20 minutes play out. And you're like, isn't that what you said yesterday and the day before? Yes, but this is for a different purpose. This isn't for low probability price action. This is for you being uninformed because what you expected to happen has already happened. It's already gone and done. Your draw liquidity. Mine was that liquidity pool. It's done that in the pre-market with a pretty large range. You know, is it 343 handles pre-market? That's a lot of range. That doesn't do that over. That doesn't mean like it's not insignificant, you know. But we do have a first percent fair value gap. Alright, I will use I'll use both. If you're in the round table, you know that an order block followed by a fair value gap is a very strong pattern. So whenever you see an order block followed by an inefficiency or a fair value gap, or even an immediate rebalance, is very, very strong. If it becomes an inversion, that's also very strong. It doesn't mean it has to hold up. It means that whatever happens here narrative-wise, that's probably going to be the most significant narrative on your chart. So if it inverts this, very significant, extremely significant. If it holds the upper half, still extremely significant, more even, because that's matching up bias. So of course, if your high time frame target is met prior to the session open, you take a neutral stance and you let more information come into the marketplace. You can't immediately start looking for a trade at the open or 5 minutes after the open. Because what are you now targeting? You've already hit your draw liquidity. Are you looking for a reversal now? Are you looking for it to continue in the direction of your draw? Yeah, I don't know these things just yet. So I need to let the chart tell me stuff. Here it's wicked 1, 2, 3, 4, 5 times that same level right there. If it now goes and inverts this pattern where it closes below the order block, closes below the first presented gap, what I just say about it being a very strong telling piece of narrative. If we do close below this, that's a V-shaped reversal. And you've got some very good, relatively good lows down here. Your trading is never going to be the highest degree of probability if you do not have a high time frame expectation. But if you go for the lowest hanging objectives, the nearby targets like something like this, or something like this, or something like this, these are nearby targets. If you're going for these larger, bigger trades, if you're bullish on the day, you can absolutely go for something like the London highs. But if you're bearish on the day and it's already met your target, now has your higher time frame target changed now that you're now bullish? So if you see something where okay, it's switched directional bias, it's no longer going to move on the sell side because we've already filled it. Now it's allowed to go in reverse all the way into the London highs. If you can see that, you can take trades that aim for the London highs. But if you okay, let's go down to the daily chart or up to the daily chart. If you've got nothing beyond here, what are you limited to now? I could continue into the volume imbalance, or it could go back above the fair value gap. Both ways, slash neutral, slash I don't know because it's already done what I expected it to do. I have to sit still. I have to get more information. Right, I didn't invert the order block. It only inverted the gap. I know it closed below by 1 tick, but if you know me, I always demand it closes significantly below. Something like this. If it closed there, that would be good. But 1 tick is not significant. See how that wick low just touches the end dog high? That purple line? That's a sign of strength. And you've got relatively good highs up here. Let's take a look at the indexes. They're in pretty similar spots, to be honest. I don't really see that as much of an SMT. Alright. This is one of those days where you don't get deep discount pricing because each opening price only has a very small degree of movement below it. So that is discount pricing below 830. And below 930, you've only got that tiny little wick. Ever so slightly. Look at that. A very small part of the daily range, which you can see is delivering very, very tough. If I had a bias, it would be for the relative equal highs up here. But my bias has already been met, so I don't need to look for more things to deliver. I can be content. Again, it had that little drop below the end dog's midpoint, but then it closed back above. This 950 macro should start a price run because it's kind of stagnant unwilling to move right now. Want to see 950 come in and just really send it. Or if it stops the price from before 950, then you want to see a lot of displacement with fair value gaps at 950, between 950 and 1010. Right, I'm still watching the midpoint of the Andog. This seems to be the most significant PDRA. I'm going to take the first presented gap off because I can see it's not using the key levels inside this thing at all. So take that off. I'm going to look for a different one. Water block is fine. It's using these key levels at least somewhat. You should never be afraid of removing a PDRA that is constantly getting run through. If it's not holding well, then you've selected the wrong one. So by selecting this is technically a valid first presented gap. It's taking a high. It's good enough size. I can see, you know, 1, 2, 3 pass-throughs where it didn't look at a single key level inside this thing. So I'll take it off ruthlessly. Right, we'll wait for 950 to come around. I can see now in hindsight that this here was just consolidating, and the fact that I was trying to predict movements inside this, that wasn't, that was a mistake. Let's see if it can leave this consolidation out decisively, because it is a consolidation, no two ways about it. I think that is just high resistance choppiness. We're now below the Andok midpoint, which shows it's weak. It probably wants the 930 price again. Right here. See 930 price. I'm gonna keep waiting for something decisive here, because it's still not enough information for me to work with. If I had a predisposed bias where I have a clear idea to be, say going into this liquidity pool down here, the one that already got hit, but say that didn't get hit pre-market, it'd be very easy for me to just frame everything in the direction of low prices. everything I see. I have to filter my eyes and look at the bearish PD arrays. I have to look at the bullish ones that fail. I have to look for a sweet buy side. Everything has to be filtered to looking at lower prices because I already know off of the high time frame it's going to go lower. I just need to position myself ahead of that. But if I don't have that target or it's already been taken, like in this case, we already met a high time frame expectation, then I don't have that same filter. So now I'm considering both sides of the market. I was considering relative equal highs, it failed. I was considering the 930, that one hit, but I still don't have anything clear or decisive that would warrant a trade entry or that would warrant a one-sided prediction. Like, I can't easily just say here that we're going to go all the way to pre-market low. I also can't say that we're going to go up to the relative equal highs because I don't see anything here decisive enough. There's not enough displacement, there's not enough inefficiencies, there's not enough information to work with. When you have a high time frame bias, that's less important because you already know the direction the market's going to be going in. We're only in this situation because we don't have that. Today was a unique day. Well, not a unique day, it happens quite a lot, where if you have a bias or an expectation for the high time frame, but it gets hit before the session even opens, you still have this thing there. $29,340 draw liquidity. Already at $29,340. What do you want to mark out the midpoint of the bullish wicks in the 935, 945 time range? I don't see the reason to be honest. It did look at the consequent encroachment there, but yeah, I didn't see that in real time. I just chalked it down to a consolidation when it failed. Just realized I'm logged in. You want another short and sweet answer to this question? It's simply wait for more information. We'll see how we treat this analog. That's an SMT. It's a great spot to run up. It is an SMT. Okay, I want to see this become an SMT because it isn't technically an SMT yet until it's a swing point. So I'll wait for it to become an SMT. If it doesn't become an SMT, it's fine. If it does, then we'll keep talking about it. But an SMT requires a swing point. If it's just a singular candle, it isn't an SMT until this third one closes. Otherwise, it could just keep running lower, keep running lower. We're inside the analog, below 930. We touched that standard deviation to the tick. We left a long wick, took out some sell side, and it's in a 5-minute BISI. I want to see that deliver higher prices now. Back to the relatively equal highs. I want to see a bullish fair value gap form because we haven't got one other than this, but that was inside the consolidation. No busy. The reason I need to see a busy is because if you've not got any imbalance of buy side delivery outside of like a reclaimed. Oh wait, no, never mind. If you've not got any imbalance of buy side delivery, then it's harder to trust the order flow because although it's respecting stuff, it hasn't shown an imbalance on the buy side. It's still efficiently delivering. You won't see it be inefficient where it leaves something open. It hasn't done any of that here. It just rejected the first presented order block instead. I still want to be bullish, but I need to see busies first. First presented busy. Because to me, I don't see a first presented fair value gap yet. I made the mistake of assuming this was one earlier, but it was in the consolidation, so that didn't really count. This one, you could argue that is a first presented civvy, but there's no first presented busy, no matter which way you look at it. There's a huge difference in the range size of the New York session compared to the pre-market session so far. The macro hasn't done a whole lot. I mean, it did kind of send us back and forth, but we're about to hit 10 o'clock, end of the opening range. See if it brings a busy around. So 30 minutes into the session and you've not got a first presented fair value gap. That's high resistance conditions. Because every time it goes lower, it's overlapping it with a wick and not allowing any imbalances or inefficiencies to happen. So, that's the definition of high resistance price action. Everything's overlapping. There's not any porous, one way just sell side like this. There's nothing like that. It's only up, down, up, down, up, down, up, down, up, down, up. Inconsistent, high resistance. We got to see it become inefficient. Displacement. 946. No, I don't consider that because part of the consolidation. So I'm just not going to use it. If you see this as a first presented Sibi or Valley Gap, I can see where you're coming from, but to me it's part of the consolidations slash bounce price range. So I'm not going to use that. I'd rather use the order block. For 6. Oh, well, that one's too small. That one's too small. Because it's got. How many handles is that? 16 handles is sometimes acceptable, but because it's got whips going all the way through on both sides, that's like one size, 16 handles, okay, that's one tick. Is it taking out any highs or lows? No. So that's, I don't know, the absence of a tick. Across, whatever, that's 1 point against it. It's got the 2 wicks going through it. That's another point against it. So it's not actually inefficient. And it's not suspension because volume bounces, although they're there, it's not taking anything out. And there's not actually any displacement. All the first presented Valley Gap logic is mostly detailed in the 2025 mentorship. So you can just go through that. It's very good. Still no busies. MES1 and MESU. Does one go for trying, one for trading? No, they're both the same. I think you're confusing the mini and the micro with the continuous contract and the September contract. So you should be using ES for charting and then MES for trading. We don't need to. You can just use the micro for both if you want. It's not like it's a problem. It's just that you'll get slightly more information, more accurate information by using the mini. Again, no bissies, not even any civvies. So keep waiting. Every time it has a move up, it just fails. It gets slapped down by the ant dog. And you know to start looking for setups and call it a day. If you don't get a first presented 5-hour gap, you should call it a day. So right now, you should probably call it a day. Unless you are a silver bullet trader, then you can look for a 10 a.m. fast presented 5-hour gap. And if you don't get one of those, then you can call it a day. I'm just teaching, so I'm going to be here for a while. But I would have already stopped. Like, I was actually trying to trade this. Yeah, I know this is not a friendly market. Compared to that pre-market run, look how easy this was. If you sold anywhere in this, you made money. I'll send you a video on it, content. Even though I've already sent you those videos before. Alright, maybe we'll get a busy here. Maybe. Never mind, no busy. Ten on 2 is too small. And it's overlapping every candle around it. There's no actual one-sided porous price action here. It's just within that consolidation. This whole session right now is a high resistance sloppy choppy. Alright, we're gonna end it here. We're gonna end it here because obviously this is not the market you ever want to be trading. We should have done a part 3 of today's video, or of yesterday's lecture, to be honest, because that would have been perfect topic for today. But it's fine. Obviously, you do not want to be getting involved with this session. I don't want to be getting involved with this session. I'll probably trade the pre-end session if I want to trade at all. So, yeah. We'll end it here. See you guys tomorrow for Friday, final day of the week.